India is one of the most fascinating countries in the world. In today's Algomoneyfest show, we will talk about India's most famous silver ETF. But first, let's talk about gold in India. The Indian love for gold is well known. So much that the world has come to know India as the gold market. As a result, several investment opportunities have cropped up in the country to help investors diversify their portfolios and invest in something other than gold. One such opportunity is the ICICI Prudential Silver ETF. Today in Algomoneyfest show, we will cover everything you need to know about this unique exchange-traded fund and how to study silver ETFs efficiently. So, let's start the show now.
Hi, welcome back, and today we are going to talk about silver ETF and the first silver ETF in India, which is ICICI Prudential Silver ETF. So let's start with what is an ETF. ETF is exchange traded funds. It's like an index that tracks a commodity or bonds or a basket of assets, and so you follow the underlying asset. Let's say they buy a lot of silver and they issue some shares and they send the shares to the stock market, and you click with your phone and you buy silver from the bus or with your cell phone very easily. The best website to check that is the ETFDB, etfdb.com. It's a very old website, so if I want to find something specific, I go to this website. But let's go to this case. Let's go to silver, and you will check all the ETFs. This is a way to study silver ETFs. First, you go and you follow some steps. You check the AUM, the asset under management, and you will see that the most popular, or maybe in the website here, you will see that the one with the most amount of assets in management, which is the largest one, is the SLB. The SLB is $11 billion in assets, and you have the rest of the ones. And between them, you have the synthetic ones. It means that you have some that you will see ultra or AHQ, which is a double and synthetic that moves. It's a financial ETF. There's not real physical behind it, like AHQ. It moves double the double returns of silver. So if silver goes up 1%, this ETF goes the double, and if silver goes down 1%, it's like derivatives. AHQ like ProShares Ultra Silver and the other ones. Ultra Short, it means that it's inverse. If silver goes up, these ETFs goes down, and vice versa. So Americans, Canadians also love the PSLV, which is not listed here. It's Canadian ETF by Sprott. This is the favorite between some Americans and Canadians, because they believe, I'm talking about Silver Apes from the Reddit, which is the most important silver community there in the United States. Reddit, go to Wall Street Silver community, and they talk bad about this ETF SLB because they believe there is no real physical backing. This is a conspiracy theory, because JP Morgan is the main custodian of the silver ETF, so the silver bars in London. So there is always some talk that what if all these ETFs are not really backed by physical silver. One of these famous silver gurus and former advisor of Robert Kiyosaki, Mike Maloney, in his book, says the same thing, that mostly these ETFs maybe are not backed by the real asset. And then you have another two types of ETFs, the ones that follow the asset and the ones that have a behavior like a derivative. So they are financially based, They're financial instruments. They are not real only financial instruments. They are mostly derivatives behind that. That's HQ. That doubles, so this is more risky. That's it. The next step is that you need to study is the expenses. This is expensive now. They will charge you commissions, annual commission from your money, from your account. So they will take from, and really they will take from the fund this amount of expenses ratio you will see here. And silver will charge you with management fees. So you want to check first the volume, second the reputation, social media network, and the expense ratio. It's very important to study the expense ratio. When is appropriate to buy an ETF? In my country, there is no real silver market. So if you go buy some coins and you buy big, you will suffer for months until you find one interesting guy who wants to buy your coins. So the market here is illiquid. So if you want to enjoy some exposure to silver, like in my country, you won't get the buyers and the liquidity you need. So you maybe buying silver through these ETFs in New York with your phone. Everybody has access to a broker that allows you to buy in New York. This could be a real strategy, and it's very useful. I believe that the ETFs are the best asset, or the best way to buy silver for the short term. If you want to trade silver, you go in, you go out fast. That's not the same like physical, because you have to send it, you have to go, and sometimes you have larger spreads between the buy price and the sell price. So you have higher spreads. So if you want to, for the short term, ETFs work well, but all the silver maximalists, they are pro-physical and don't want to touch this. That's more than I believe, and I respect that. And you want for the short-term trading. One other thing that silver ETFs offer is that you could also buy options above them. So you can buy like insurance. If they go down or if they go up, you can buy insurance and make some strategies with options in the stock market. So you can protect the ETF with options. That's not possible with physical by itself. So they have some way to hedge the risk. If you see some danger and you want to buy insurance, you can also buy options on these ETFs. So there is a big silver ETF now in India, which is the ICICI Prudential Silver ETF. I studied the brochure and the presentation, and I have found some important risk based on my experience. Let's go. First, the first thing is that a big bank is a merge between ICICI Prudential, is a merge of ICICI Bank and a huge life insurance company. The value of ICICI Prudential is around 20 billion US dollars. It's a huge company in India. That's from data from 2020. So they launched their NFO, the new fund offering, this year. And this is India's first silver ETF. And first, let's start with the classic sales speech that fund managers will do when they are launching ETFs. They will tell you diversification, store of value, hedge against inflation. So silver ETF is a hedge against inflation. So they know they are lying, or they know they are not really saying the real stuff, because they say commodities can act as a hedge against inflation. So you do a quick research, you will see that the real silver ETF, real inflation in the United States this year is around 8-9%, and the real return in the silver ETF is yield today minus 10%. So the theory that gold and silver are a hedge against inflation? Not necessarily. Are a hedge against inflation, and gold and silver are not a hedge against deflation. Both assets are mostly trading vehicles. That's it. I'm being a Wall Street silver ape. We just love silver, and we know this is basically for me a trading asset. A trading vehicles, something we just love the shiny rocks. That's it. We just love. And because silver has a mining cost, you should expect that the price of silver should go up in the long term. So let's continue with the silver ETF. In India, the silver ETF ICICI Prudential. One of the things that these silver ETFs is this silver is following the price of the London Bull Market Association fixing prices. That's it. They just follow. There is no real physical. So they just are an index from an insurance company, and they just follow the price. So they will pay you the price, and this is the most important thing. They will pay you in domestic prices. This is the key important thing, because it's hidden something that has huge risks if you crash in a particular country with specific situations. What does it mean? It means that this ETF will follow the price of silver, and they will pay you in Indian rupees, in their domestic currency. So what happens if a country, like some other countries, fall in capital controls? So you are buying here the silver ETF, and the capital controls, and you have two types of exchange: the official government exchange rate to the US dollar, and the black market, which is double from that. So if you enter in a country with a huge crisis and capital controls, you may have two types of exchange: the domestic price of your currency and the black market price of your currency. So let's say in Argentina you have an official exchange rate between the Argentinian peso and the US dollar around 100, and you have the black market, which is above 200. So let's say you are back now in this type of ETF, and they are legally exposed to pay you only the official domestic price. So they will pay you the domestic price based in the lower exchange rate, so you will lose money. Legally, you lose money. If you enter in a country with this type of investment, you will get exposed to the currency risk of that country. It's different risk. And this is what happened in some countries when they were buying bonds adjusted by inflation, and then the government, some governments started to fake the inflation numbers. So the real inflation was 20%, and the government was saying 10%. So you take a legal loss, and that's legal, and you can do nothing about it. So you have this silver ETF that could be very efficient, low commissions, but you have a specific risk, like they are paying you in rupees, and then translating the price of silver in London and paying you the domestic price of that price in India rupees. So that's it. This is the most important thing, that silver ETFs can hide secrets. If you go to the SLB prospectus, you will read, as I have read in the past, all the pages of the silver prospectus. They will say we don't pay your money because of operational risks, cybersecurity risks, terrorist risk, force majeure risk, and all types of risk that will allow you to default on their debt, and that's completely legal for them, so you won't get paid, because they will say no to paying you if they get all types of risks or force majeure or terrorist events. So that's why some people prefer to stack silver at home, and they buy physical silver. That's one of the main reasons, because they don't believe that they will pay you with the real thing when things go really bad. So these are one of the main risks. I see that the first silver ETF has this domestic currency risk. So if India goes to capital controls, you may get hit by double new capital controls, and you have two types of exchange rates. Maybe this you want to ask if they have some dividends. Mostly these ETFs don't pay you dividends. So if you have explosive inflation like this year, silver this year went down the 10% and you get no income. So big institutional investors tend to not buy this type of asset because they don't pay income, so they can add these instruments to their portfolio. They are forced to add something that adds some income. And according to your country, you may get hit with different tax levels. And this is not financial advice, only for educational purposes, but you may get hit with different taxation, because these are very different asset than simple stock. Recently, we were warning about the performance of silver, warning that the silver could go lower, and that's what exactly will happen, because the low volatility was equals as the level in 2012. So silver went down, but not too far from the 21 level, and basically there. So we went neutral, and still we are in the middle of the rate hike cycle. So there is a neutral position in the gold market and in the silver market. So let's go back, and it's more than enough time, and thank you.